Ladies and gentlemen, good evening. This is Christopher Aaron. It is the 16th of November, late in the evening. And since the Trump election last week, there has been a major change in several of the markets. We are focused here on the precious metals. And there is a big warning sign that has appeared just over the last week. We are going to look at that and some possible ramifications for what it means. Now, just to begin here, remember the focus of this channel is on technical analysis. We are looking at what the actual market is saying. This does not change the fundamentals, what I'm going to present in this video. We all know the fundamentals. We know central banks are printing a ton of money. We know there are negative interest rates in many of the world economies. We know there are unwinnable wars being fought all around the globe. We know governments continue to bail out more and more corporations every year, and the way they do that is by printing more money. So understand, those are the fundamentals. However, those same fundamentals were true from 2011 to 2015. And what happened? The price of gold fell from 1900 down to 1045. So that example should be reason enough for you to basically say that the fundamentals do not impact the market over the short or the intermediate term. And that is primarily what I'm focused on here. Over the very long term, yes. Over a decade or so, are the fundamentals going to win out? Yes. But the fact is, the markets can move against you by a significant amount, even while the fundamentals are true. How do we know what the actual market is telling us? It is by looking at the charts. And when the charts change, we must change our opinion. I don't agree with many things that John Maynard Keynes proposed in his economic theories, but I do like this one quote, which was a response to him being asked why he had changed one of his opinions. And he said, "When the facts change, I change my mind. What do you do, sir?" So, we're looking at the potential of a head and shoulders top pattern forming in the gold mining sector. This is analysis that went out last weekend to premium subscribers. I am sharing it here with everyone because this is going to have extremely important ramifications for the precious metals over perhaps the next 1 to 2 years. This is the textbook definition of a head and shoulders top pattern. It takes its name from the formation of a silhouette. If you can imagine the shape of a person with a left shoulder, a head, and a right shoulder. Yeah, it's a little bit crude, but you get the general idea. And this line right here is considered the neckline. This is a support line. And when the price breaks through this support line, you have the completion of the pattern, and it then targets a distance below this neckline that is equivalent to the amplitude of the head. So if you took this head and flipped it upside down and came down here, your eventual target would be somewhere here off the charts. This is the head and shoulders top pattern. Now, unfortunately, for precious metals investors, where are we seeing the head and shoulders top pattern? It is in the HUI Gold Miners Index, which is the index of the 20 largest unhedged gold miners in the world. This is a rather clear pattern. If you look at it here, the left shoulder here formed from April through the beginning of June above this 190 region. The head from June through the beginning of October, again bouncing at the 190/195 support zone. And then this right shoulder here forming, and it looked very much like the sector was getting ready to break out of a downtrend here right on the Trump victory. You had that $60 spike in gold just 1 week ago, and everything got ready, and then boom, reversed to the downside, totally changing the charts in just 3 days. And all of a sudden, this support line here has been cracked, and this pattern is considered now to be in play. This is not a hypothetical pattern. So this has important ramifications whether or not you're invested in the gold miners, or if you're in the silver miners, or if you're in physical metal, or if you're in the ETFs. And the ramifications will be different depending on your particular situation. But I want to tell you what's showing up in the charts here right now. So basically the amplitude you can see right here was 95. Let's call it from 195 up to 285 or so, 190 up to 285. And this amplitude gives us, when subtracted from the neckline, gives us a target of 95, which happens to be coinciding with the bear market lows from 2015. So, what does it mean if the gold miners are going to be falling back to these lows? And mind you, this is the exact same school of analysis that I was using to find these lows. Okay? And we made a lot of purchases here for the firm and for the premium subscribers in February, some in March. Okay? But it was the same form of analysis that we were using to identify these lows. This form of analysis is now showing me that this has a high probability of coming back down to the lows. Don't shoot the messenger. My only goal is to show you what is happening. I understand the fundamentals, and I believe precious metals have a special place in the long term. Over the medium term, this does not look good, however. What could it mean if the precious metals miners are coming back to these lows? It could only mean that the price of gold is coming back to its low near 1045 or perhaps lower. And we will look at some of the ramifications for that next week as far as the price of the metal itself. So what to do now? This is going to be highly dependent on your situation. There's a very different scenario. For example, if you're someone who's looking to accumulate gold over the next year to 18 months, this might be a very good thing for you. If you're saying, I missed the opportunity to buy around 1,000, you may get that opportunity coming over the next 3 to 6 months. If, however, you are all in on those leveraged ETFs, boy, this could be an entirely different scenario for you. So there is no one scenario that is going to apply to all individuals. All I can tell you is what's showing on the charts. We do disclose the exact moves that we are doing here as a firm as far as what we are buying, what we are selling, individual companies, ETFs. There's also the possibility of buying protection in the form of puts, depending on your individual scenario. This will not be appropriate for all individuals, once again. I also do individual consultations for people that are looking for some guidance as to their personal situation. So once again, that is what the charts are showing for now. The miners are looking very bearish. I want to make one more caveat. If you've listened this far, here it is. Approximately 1 out of 3, I would say about a third in my experience, a third of these head and shoulders patterns will fail. They will basically abort right after they have been triggered, and they will reverse higher and basically fool everyone. This is just the name of the game. So if you're going to say, well, then the system is not reliable, so what's the point in following it then? Well, I would tell you that there's nothing in life that is 100%. If you can find me one system in life that is 100% accurate all the time, except for perhaps the knowledge that we are all going to leave this world one day when we die, Find me one other thing that is 100%. That said, the Head and Shoulders top pattern seems to be correct approximately 2/3 of the time. So could this be one of the times where it is incorrect and it reverses higher and fools everyone? I maintain that it could. The fundamentals certainly indicate that it could. I have not sold all of my precious metals nor all of my equity positions at this point for exactly that possibility. However, I will let the charts dictate to me what is happening, and I will try my best to withhold my preconceived bias when I look at the charts. That is the point of this. And I do thank you for watching very much. And the next update will be a week from today. We will look at some of the more recent charts for the metals themselves then. Have a lovely evening, and I will see you this time next week.